Greetings, members one and all of the Salivation Nation. Gold prices surged to a 7.5-year high before there was a slight pullback as coronavirus and other concerns mount. Let's explore. This comes to us from Fox Business, and very interesting indeed to see the movement in metals. And now with the slight pullback, we can see here they have pulled back $3 or so. Now it's down to $17.5740 for the ask price for gold, and silver is below $18 an ounce now again, but still up slightly on the day. But still, there's concern out there. But the stock markets are not reflecting that. They're up a little bit. Very interesting indeed. Gold prices rallied here, according to this Fox Business News article, to more than 7.5-year high on Monday, as investors continued to buy the precious metal amid concerns over the strength of the economic recovery and the unprecedented stimulus that would lead to inflation down the road. Gold spot traded up 0.81% at $1,760 an ounce and was on track for its highest close since October 11th, 2012. The precious metal has gained $15.83% this year. It's a pretty big turn on for precious metal. That's a pretty good return, I would say. So with worries over North Korea, trade with China, and the U.S. election, buyers are keeping gold on the buy list, wrote George Garrow, managing editor at RBC Global Wealth Management and a member of the COMEX board of directors. He pointed to continued buying of exchange-traded funds and the reopening of malls in New York City's Diamond District. Gold has surged this year as investors have sought safety in the precious metal amid the economic fallout caused by the COVID-19 pandemic. Stay-at-home orders aimed at slowing the spread of the virus forced non-essential businesses to close their doors, leading to the sharpest economic contraction of the post-war era and unprecedented support from policymakers. In response to the economic slowdown, the Federal Reserve cut rates to near zero, embarked on an open-ended asset purchases, and introduced lending programs to support the flow of credit to small businesses and households. And I will add a little note here that they were doing some of that before the pandemic hit with the repurchase agreements. The U.S. Congress, for its part, in March passed a $2.2 trillion CARES Act, which extended $1,200 checks to most Americans, in addition to providing relief for healthcare providers and businesses. Those policy actions are likely to support the precious metal, according to the commodities research team at Goldman Sachs, which last week raised its 12-month price target to $2,000 an ounce. And speaking of which, here is the article that talks about how Goldman Sachs has hiked its gold price forecast and debasement fears in a weaker dollar. Last Friday, it updated its 3, 6, and 12-month gold price forecast to $1,800, $1,900, and $2,000 per troy ounce from $1,600 to $1,650 to $1,800 per troy ounce, and maintained its long December 2020 gold trading. So this just goes to show you that they're kind of ahead of the curve here. It makes a lot more sense now with these predictions here. Those numbers do. Their analysts attributed the recent decisions to a conflict between negative wealth stock to emerging market consumers and positive fear-driven investment demand in developed markets. And HSBC senior precious metal analyst James Steele said fundamental drivers of gold prices should be the low yield environment, substantial fiscal and monetary stimulus, and the inflationary impact of asset prices. Yeah, it is something else. It's to see where things are. In fact, when this article was written, gold was just trading above 1736. Now it's well above 1750, and so it's that big climb is certainly something to take into consideration here, and talks about also Indian gold imports that have plunged by 99%, while Russia's central bank ceased buying gold. We talked about that, in during those times, how the markets have really been rocked, but gold is something that is held fairly strong during this time, all things considered, and premiums up and everything, and people certainly are nervous even with that big sell-off out there. So it's this forecast is quite telling for Goldman Sachs here to make that. We'll see where things go, but I think overall people are certainly bullish on gold, even though previously when the price is going down, you see different news stories about the other way around. It's kind of a yo-yo pattern, but nonetheless, I think overall I'm fairly bullish on gold, towards the end of the year. We'll see how things play out. And even with silver, I think silver will follow gold's coattails to some level, and it is to some point now. The gold to silver ratio is narrowing, but not by a whole lot, but it's definitely well below that 100 to 1 level. Gold investment demand tends to grow into the early stage of the economic recovery, driven by continued debasement concerns and lower real rates, wrote a Goldman Sachs team led by Vice President Mikhail Spragas. Goldman isn't alone in suggesting gold could top its previous all-time high of $1,888.70 that was reached on August 22nd, 2011. Well, I've heard different numbers. I thought it went over $1,900 an ounce. So anyway, since April, the precious metal has been testing key overhead resistance near $1,750, said Matt Millay, Boston-based chief market strategist at Miller Tabak and Company. Any meaningful break above $1,750 should give gold the kind of boost that will take back towards its all-time highs from 2011 very quickly. And I kind of have alluded to that in my Market Watch update yesterday. Every Sunday night I have a live stream when we watch the markets, among other things, and it was breaking out above that 1750 for a little while, and it's moved up. So there you have it. It's very interesting indeed, fascinating. I will make note that there has been talk of yet another stimulus payment. I think Trump is for more stimulus checks going out to Americans. It is election season, and more than likely, politicians out there will probably go for something like that. Of course, I think that's the wrong move. Well, then what needs to happen is the support of those businesses to keep the doors open and keep people on the payroll. That would be a far more useful and better way of spending that money. But nonetheless, the markets are up. Of course, why are the markets up? Well, a lot of that is liquidity from the Federal Reserve, and a lot of this CARES Act money. So there's concern out there, economic, and the coronavirus surging in cases that are out there now is another real concern. We're seeing hotspots develop in other parts of the country, and meaning that it's going to have an effect on the economy, and that it's going to take much longer, I believe, to recover from this than originally hoped for by the president and others. We still need to get through this. It's been a tough road for many people, not to mention the economic effects, but the actual effects of the virus itself. People getting very sick, others not so much so. I've heard rumors that the virus has essentially slowed down, and the contagion factor is not as great, and that it's less severe. I'm hoping that's the case for some of these new cases that are starting to pop up now. There is increased testing, so that increased testing, which means there can be more positive cases, and more positive cases that are asymptomatic, which is good news if they're asymptomatic, and hopefully the asymptomatics won't be quite as contagious. But nonetheless, gold is what it is, and one of the cautions about buying gold at the prices where they're at now is that if things do normalize and that the economy starts to recover quickly, then the prices could go back down. So anybody buying gold at these prices now may be disappointed if the price goes back down. Now, that's a chance we always take when we purchase precious metals, but we do so at that risk, and also understanding that gold is meant to be a hedge against economic instability. It's really not a hedge when the economy is doing great. And that's the thing that people don't realize. That's what hedging is about. Hedging your bets, and it's an insurance policy. It is a wealth preserver, but it's especially a wealth preserver in times of crisis. Sometimes those crises may occur personally as opposed to nationally or even regionally, meaning that if a personal crisis and you have to sell, you might have to sell when the prices are low. That especially holds true for silver. And as long as people understand that going into precious metals, I think they can rest easier knowing that they're holding something of value, even if that price goes down and you do need to sell for one reason or another. Which is why it's always good to diversify and to not limit it and to not to put too much into gold. You know the saying, don't put all your eggs in one basket, hard boiled or scrambled or what have you. You want to diversify and have other avenues in times of crisis, personal crisis especially, but national crisis is what gold is for. That's why people don't suggest much more than 10 to 20% tops of gold in a portfolio. So there you have it. Post your thoughts below. Interesting indeed. This article here about where gold is, 7.5-year high. Sure, it's paused back off a little bit of that since that article was written today, but nonetheless, the metals are up all around today. So I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.